Hello, everyone, and welcome to this edition of Investing and Trading Live. As always, my name is Josh Lilquist, and we are happy to have you with us today. Today, what we're going to cover is a lot of different things on the market open. Markets open slightly up on the day, but as of about 9:22 Central Time here in the AM, markets have dropped a little bit, so we are looking that it's this down on the day. We're going to peek at some of that here today. We have some notable stock earnings today. Disney, we have Disney, Wynn Resorts. I thought there was a couple other household names in there that we'll peek at and see what the opportunities are. Caterpillar seems to be looking really good right now. Cats is really showing some strength to the upside again for a while now. We're going to peek at those. We'll also peek at Disney. We got out of that option yesterday. We have earnings coming today. Disney actually had a headliner yesterday with Penn Sports. Dave Portnoy actually bought back 100% of his Barstool shares, and he owns 100% again, getting Penn out of there. But it looks like ESPN has, let's go to that headline. It was ESPN had, and Penn Sports, I believe it was. Okay. Did not load. Of course, when you're trying to get into something, it doesn't load. Anyways, it was ESPN and Penn Entertainment. They ink a sports wagering deal, so there could be some volatility there. That actually could be good for Disney because obviously Disney owns ESPN. But ESPN's been struggling for quite some time, so they've been laying off people, so that might bring Disney's earnings to look pretty good because ESPN has been getting rid of all their main faces that are on the shows, SportsCenter, all the different newscasters and sportscasters that are on there have been getting the axe. So we'll talk about that. We'll look at some opportunities with gold and silver, and then also we'll peek at those currencies. But as we know, there is risk in trading, and these are strictly your decisions, not mine. This is only for entertainment purposes only, and really it's my entertainment, but I hope you guys like what we talked about. Make sure to subscribe to the podcast if you're listening on Apple Podcast, iHeartRadio, Spotify, wherever you listen to podcasts, and also check out the YouTube. You can just check up Josh Lilquist on YouTube, and you can see the outtakes of the show. We do a show every Thursday, usually about 4 episodes. Matter of fact, tomorrow we'll be doing 4 episodes of the show tomorrow. I have my guest, Al Conix, is on the show here. So make sure to peek at that tomorrow. Catch it live. We do every single show live. There's no editing. And we've been seeing some great progression on that and a lot of listenership. So we appreciate everybody listening to the show, and we hope to continue to do this as we progress into the future. That being said, let's get into the markets. So S&P 500 currently at 448.29, down about 45 cents on the day. It did gap open up a little bit and showing some weakness here today, especially on a 1-hour chart. It dropped initially, came back up, and now we're seeing a little bit of a drop again. So that's the S&P 500, the SPY ETF to be exact. The diamonds, the DIA ETF, which is the Dow Jones Industrial Average, is actually down on the day as well, but ever so slightly. It's only down 3 cents on the day. Stock wicked up, or the ETF wicked up a little bit, and back right down to opening price or at the opening bell. The QQQ, which is the NASDAQ ETF, down about $1.82, which is only about 0.5%, but much bigger than the other ones. We're seeing some stock market declines here off that weekly supply zone that our special guest Luke was talking about yesterday about being in some options short on the S&P 500. And if for those people that don't know what shorting means, basically it's profiting in a down market, and there is strategies for up markets. Everybody knows there's strategies for down markets, and shorting is that strategy. Options is how you do that in your retirement accounts. So if you feel the market is going to go down in your retirement account, rather than just buying and hoping it goes up forever, have strategies for both directions and capitalize on market moves, whether it goes up or down. So the market's down from the highs here of, looks like Wednesday the 19th of July, down almost 5%, so 4.71 to be exact. So we're seeing some weakness coming to the market, but we have some sloppy demand zones below current price on the QQQ, but the SPY still has that demand zone we've been talking about that was created back in June, beginning of June of this year, and still got a ways to go. It still has about 4% to go to get down there. So I'm looking at seeing this market potentially could pull back even more until you get down to the 428, 424 area. And as there's no specific price, it's just areas of opportunity for institutional order flow that we've been talking about for a while here. And once it gets down there, we'll make a decision on what to do down there. There might be some ways or strategies to use options to collect premium and get paid to wait till it gets down there. So we'll keep an eye on that. Moving on to the IWM, which is the Russell ETF, Russell 2000. This also down on the day, actually down a little bit more, down about $1.03, which is about 0.53%. So the biggest loser in the day so far. It is early in the day. A lot can happen, especially with earnings here coming up after the market close. Got to take a sip of coffee here. It's still early here in Minnesota at 9:30 for those late risers. But if you've been up for several hours like myself, the coffee just doesn't start until later. All right. Some notables here. XLE, the energy sector. USO, actually, I saw that earlier. It was looking pretty good. But looking at the energy sector, XLE, which is the ETF for energy, is up about 1.63%. High on the Bollinger Bands. I don't see any major headlines. Here's an interesting headline. Stagflation has disappeared from the lexicon. Why these analysts say it may be coming. Interesting. Well, for those that want to get an opinion on that, go ahead and get your opinions. Make sure to make your decisions based off the price chart. And I don't see any major movers in the price chart for any of the time frames. I like to use the larger time frames, daily, 4-hour, weekly, even for decisions. I typically don't go any lower than that, but a lot of people do. It's based on your preference. So the XLE ETF is moving the biggest on the ETFs. A lot of them are up. Almost all of them are up, roughly around 0.5%. USO is up 1% on the day, gapping up to 74.82. Looking at the oil futures contract, looks like oil futures contract is up about $1.16 on the day, which is would be over $1,000 per contract. So that's the beauty of futures, is you have the leverage. So this $1 move is $1,000 for one contract in the futures market, which is the oil market. The CL is the ticker symbol, but it is coming into some overhead supply. So I would be cautious to what's happening there. But over the last couple months here, looking pretty good with oil. Unfortunately, that doesn't look good for our price at the pumps. Looking at your grains, let's look at corn, actually. Corn down 0.41%. I'll be planting some corn hopefully here next year. So looking to get the prices to go up over the next year, but I'll definitely be hedging the corn here next year. So yeah, corn actually down tremendously, down to the lows from back in 2020 again. And yeah, not too hot from the highs of 2022. But corn's pretty volatile, though. It's very thinly traded. Gold also down about $4 on the day. Not a big mover. There is overhead supply up in here yet. And we had a supply zone drawn on here. Let's see. Yeah, that went right through that. Actually, that's not a supply zone. What is that? We must have been looking at some options here. I'm going to take this drawing off the chart here for those YouTube viewers. Silver is up on the day, ever so slightly. Basically, it's even, 0.02%. coming down to a demand zone. So we're getting closer to that demand zone, which actually we're going to be scanning and surfing for some premium. So I'm going to write that down. So we look at SLV, the ETF, when we do our scans for options. That rounds out your ETFs, gold and silver. Let's get into some stocks, some notables. We have Disney reporting earnings today. Disney currently at 88.63, gapped up pretty big on the day, probably because of that Penn deal with sports betting, but has dropped since the open. So basically getting almost back to price where it would closed yesterday, but at 88.59 right now. Did close out of those options just because of earnings coming up here. I mean, earnings, it could gap up 20%, it could gap up down 20%. I don't know. I'd rather not be in that position to be upset with a winning position just because of a big news event that I can't control. So it's always good to just take that out and move on to the next one. So that's Disney. And we'll look to get back in there. It is getting higher on the percent Bollinger Band, but who knows? It could be offering some premium on some better strikes. So we'll look at that as well, just double checking those when we scan for those. Major notables on the day. Nothing big. See if there's any other earnings here that could rock the markets. I don't see any major household names other than Disney here today. Yeah, not much. Let's see what tomorrow brings, or before the market open. 154 before the open tomorrow. Some major notables we have. Oh, nothing that really jumps out at me at this point. Yeah, nothing before the market open tomorrow that really jumps out at me to my knowledge. I don't know about after market close, but yeah, nothing really jumps out at me tomorrow. No major household names tomorrow. So it might not bring a whole lot of volatility with these earnings tomorrow and the end of the day here today, after market close. So that was Disney. AMC down 0.59%. Boy, those options that we were talking about look probably they'd be pretty good right now, but you know what? This is a volatile stock. It's not worth the risk sometimes. Target up 62 cents on the day after the drop last few days. They have earnings coming up. That's going to be a big earnings call on the 16th, next Wednesday. That's going to be a big one with Target. Who knows? They could show some rough earnings since the last earnings call. All right, so let's go scan. Well, actually, here is UPS. We talked about UPS on the show yesterday. UPS actually, after they announced everything yesterday, moved about a total of 5% up and down yesterday, closing the day down on the day, and also down today as well, gapping down. So the increase in salary for the full-time workers is going up to, I think, $100,000 as an average for a full-time worker, which is about, I think it was $49 an hour is what it was. And then the part-time workers was increased, from what I saw, I can't confirm the source, but what I saw was $21 per hour, which really isn't that much. But and that's probably why they were fighting for that agreement. I mean, getting these people paid what they think they deserve. I mean, if we don't have UPS, I mean, they deliver a lot of packages, and we would probably not get a lot of our stuff. So good job to those guys in that union. All right, let's scan for some options opportunities. So as we know, we like to look at the percent Bollinger Band just as a gauge of where's market conditions, where are they at now. Excuse me. Excuse me. As they say in Canada, oofta. All right. The first one we're going to look at was CRM, which is Salesforce. Salesforce is about negative 5.6, 5.7 on the percent Bollinger Band. Currently in the demand zone we had drawn from a few weeks back. Now we got to look at the premium on this. This is probably not going to give any premium. It's on a 2 on the IV gauge, which is not, nothing to run home about. But we'll look anyway. So CRM current price is at 208.82. The 30 days, the 190s is the only thing that's given over 1%. So let's look at 190, where that is at. And 190 just doesn't, well, you know what? Was it 190 or 195? Yeah, the 190s are given just over 1%. Which there's a few lows there. There is a little demand zone that has been tested there. Price would need to go down. Let's just look here from current price. 9.5% in 30 days. That actually might be something to look at there. It is in that demand zone now, but it looks like it's going to break through. So that one, potential opportunity for those that think they want to take on the risk there. As we know, this is just my entertainment here. Apple actually not looking good. Apple currently at 178.55 off the highs of, right around $200 per share, I think. Now Apple struggling here, but volatility did increase yesterday, but it has lightened up a little bit today. And with price at 178 right now, I doubt they're going to give a whole lot of premium, but we're going to look anyway. Matter of fact, let's get out of this. I don't like the way this looks. Close out. We're going to relog in because I just did not like. I didn't want to do that. Hopefully it didn't save like that. Did not like the layout. Sometimes it does that if you log in kind of a little different than you normally do. All right, logging back in. All right. So we were looking at Apple. No major demand zones on any price chart. There's a slight gap that it's got to fill here at about 176, but I thought there was a 1 hour chart that has a demand zone that is getting near to that might have some meat on the bone, so we'll look at that. And of course the platform is not trading live now. Okay, well, whatever. We should still see the options chain. All right, Apple, the 178. The only thing that's given any premium, really nothing. Well, that's because it's on the 9-day. Let's look at 30 days. 30-day out looks like, wow, no premium at all. The 175 is the only thing that's given anything, so volatility is low on this. It's slowing down. Nothing worth even looking at here with Apple. Even though it is strong, I still don't think there's enough meat on the bone for that one. All right, so that is your Apple stock there. Let's look at Yum, which is not Google. It's I think it's Domino's Pizza. Can't remember what they changed. It's something odd. It's obviously food because Yum is tasty, but here we go. SLV. That's exactly what we wanted to see here. SLV is coming in is negative now. SLV has that demand zone at about $20. Volatility, unfortunately, is still pretty low, but let's look at the options. Current price at $20.90. Wow, not giving anything either. Maybe the 20s, but gosh darn it, not giving anything. Nothing good in there. UPS volatility is also, boy, yesterday would have been the day. Volatility was high yesterday. Darn it, we missed that one. Let's look at the options on that. So current price at $179.50. 30 days, boy, nothing. There isn't any premium at all. Volatility is just way too low right now. So not a whole lot of opportunity in pretty much any of the options markets that I'm looking at anyway. You could probably buy some calls somewhere, but I'm not going to go look at that at this point. You might be able to do that with CAT or something if you think CAT is long. CAT, as I mentioned earlier, looking pretty good on a tear since the end of May, beginning of June. It does have that gap to fill around the 267, 268 mark. But that being said, it does have a demand zone. Ooh, I like that one. I'm going to mark that one out. Where's my Fibonacci line? There we go. We have a great demand zone right at our 888. It's another strategy I like to look at to get into positions. Now let's go down to a 4-hour chart and see if that lines up. So 888 is just two different moving averages. I like to see a crossover on one of those to indicate if there's a potential opportunity on a daily chart. From there, going to, and wow, it looks great. So that being said, if price gets down to the 228, 221 area, I do like that on a 4-hour chart and hitting that 888 mark. But price at 255, it's going to take a while for it to get down there if it does. But I do really like that with current price at 281. So we will monitor this one, but I do like that one as an opportunity. We will watch that one as we get closer. Let's color that box here so we know that is something that we want to look at here in the very near future. So that's Caterpillar. So other than that, not a ton of options opportunities out there. But we will monitor those and do the same thing tomorrow with earnings tomorrow. No major notables on the news coming up here. Today, not a whole lot of news, nothing in the red. But tomorrow, I believe there was some CPI data coming out. Let's look at tomorrow, which is Thursday. CPI, 8:30 a.m. We get the CPI, month-over-month, year-over-year, core CPI, and unemployment claims tomorrow all at 8:30. So the market open tomorrow will probably show a little bit of volatility. So be careful on those if you're in any short-term positions. Friday, a couple notables, obviously, the core PPI month-over-month and the PPI month-over-month Friday at 8:30 a.m. as well. So we'll probably see a little bit of volatility from those, but price will always do what it's going to do anyway. It just might move there faster. Looking at our currencies, I know we haven't done that yet. We had some currency opportunities. We had that Aussie dollar that got down to our target yesterday, Tuesday the 8th, of the 65 cents mark. So that one back closed out and new opportunity moving forward. I think we had an Aussie dollar long bias, and that one's still looking good, between our 92.50 and the 95 mark. So it's about halfway through, so that one's looking good. And I think there was a New Zealand yen as well that we had looked at with also a long bias, and nope, that one's still waiting to get into the zone. New Zealand dollar was the other one. So that one currently lower than the 60.75 mark. Sorry, I can't speak on that. So that one a little bit red on the day for those that are trading the dimes. So a couple opportunities there, a couple opportunities coming up if price gets down or up to them with the currency market. So we'll continue to monitor that. And tomorrow we will have 4 shows. Make sure to subscribe and like the podcast wherever you listen to podcasts. Make a comment down there. Also give a 5-star rating if you do like the podcast. If you don't, send us an email and we'll see how we can do better for you. But as always, collect your profits when they are given to you and protect your losses when they are small. Until next time, retire young, my friends.